Hey everybody, good morning. Good morning, good morning. We have I don't know, a nice candy coating shell on top of all the snow sitting outside after it rained for several hours last night. Nice freezing rain, I guess. It was below freezing, and so JT's still at the house, and instead of in the studio where I normally produce my content. So trying to do my best to keep up with everybody and provide the best show I possibly can while I haven't been to my office for over a week. With the in-person event last week, doing the live stream from the hotel. Luckily I had all this equipment. I could do the stream from my house, but hopefully I get back to normal for me next week. And I do have different things going on here. I'm trying to keep it looking somewhat normal, and I do still have my monsters, and they just don't show up in the frame. Welcome everybody, welcome. So Infinity David Goose, welcome Merle. And if you want to chat with me like all these fine folks on the live stream, right down here in the bottom corner, click the link to be a subscriber. Subscribe to the channel. A few seconds later, you can chat while I'm live. If I'm no longer live, you'll have to leave a comment down below and tune in that way. So anyway, moving on. Good morning, Dex. Good morning, Arturo JB, Pat, Alan, Zub. I don't recognize your name. Good morning. Welcome to the stream. Spinborn, all the way from Iceland. Ben, Cliff, Tim, General Rush. Good morning. Rungamer, India, Goose on here. I don't know if Sledge made it on yet. I don't see him, but welcome everybody. And let's jump into it, shall we? So kicking this off over here. Looks like Kimberly is awake. Rob, good morning. And all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may never get one of these right again. This presentation, intended to be informational, educational, fun, and entertaining, is not a recommendation to buy or sell anything. All right? No stuff from gurus. Don't buy things. Don't buy stuff. Don't buy information for the stock market. Don't buy stocks. Don't buy options. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't buy bonds. Don't long them. Don't short them. Don't trade them. You have a substantial risk of loss. If you desire that personal financial advice, that's not what I do. I don't give personal financial advice. I don't give financial advice at all. Really. I mean, I share what I'm doing, and I share some prudent practices for making money in the market. But if you need personal advice on what you should be doing, you need to hire and consult a financial advisor. So keep that all straight. Now that we got through the disclaimer, I brought some fun things. Let's make sure the screen looks right. Yeah. Looks like I need to pull this over just a hair. There we go. All right. Check this out. Inverse dollar versus Bitcoin. Look at this baby. All the way back from September, they've been hanging right together. Almost on the money. So look at that right there. Is it as simple as that for Bitcoin? Entirely possible. Right there. The inverse dollar, we dropped out back here, and Bitcoin right there. They've been hanging right together for months and months. Hanging right together still. Now, this is one of those things. Correlated when they're correlated, not when they're not. Why does it start right here in September? Because that's kind of where the correlation started. Now, this doesn't mean they can't decouple and go their separate ways. Now, also interesting, in the same cloth here, is the fact that Bitcoin and the US 10-year inverted are right on the money too. As the 10-year plummeted, remember it's inverse, as the 10-year plummeted, Bitcoin climbed. Now, as the 10-year comes off the lows, Bitcoin drops. That's kind of interesting too, I feel like. And that one lines up in October. So they kind of came into alignment in October, whereas the dollar, the DXY, kind of came into alignment with Bitcoin in September. So again, correlated when they're correlated, not when they're not. And hey, Rungamer, and Joshua, Rob, Laura, good morning, everybody. If you got any questions along the way, throw them in the chat. That's why we got the live stream chat. And I know a lot of you you're just fascinated to see what I come up up with every day to share with you. So I'm always diving through the markets, trying to find these little tidbits here and there. And is this like a lot of the information I share? It's like interesting, but is it tradable, right? In my experience, we're drawn to stories and reasons for things, but that doesn't make them tradable. So while this is interesting and fascinating, this doesn't make it actually tradable and actionable for trades. So just keep that in mind as I share some of the stuff that just because I share it doesn't mean it's actionable or tradable. I find it interesting. And I think you would find it interesting too. And that's why I share some of the stuff that I find all through the markets. Now, diving over here, check this baby out. Look at this thing. I know it's not very clean right here. Look at this head and shoulders. Kind of, I know we poked through the neckline. That's not really valid for, I guess, the head and shoulders purists, which is not me. I look at these things and I see them. This one's pretty balanced compared to what we were shaping up on the downside. And we never completed the downside. You know, we didn't get down here and kind of finish that up. So it's kind of interesting, I feel like, that we could go blasting up on the top side. Now, this actually shows up on the S&P also, right here. Right here. We actually have this baby in the S&P. And look at that. Shoulder, head, shoulder. What do you think this does if we actually complete this pattern? I'll circle back to Bitcoin in just a second. I had this up playing with it right before I went live, so just thought I'd share this first. And I know it's not perfect. It's, you know, kind of a little bit sloppy. Doesn't perfectly hit the neckline in all aspects. But if you do this right here, head to the neck, sometimes the sloppy ones are the ones that work. Look at that, right up to 49.20. That'd be a pretty sweet move right there. Pretty sweet. So that shows up both in the SPX and yes, right here. Look at that, then head to the neck. Generally the accepted way to do this projection, right off of the neckline. It is rejecting right at the neckline, funny enough, pre-market. So that puts us up 49.70. So ES running about 50 points higher than we see. So, all right. Yeah. RL. Duh. It's the halving event retrace that I've been talking about for a while. So flipping over to Bitcoin, I have Bitstamp here, and looky where the roadmap line comes out right there. Exactly where RL's, well, actually a little higher than RL's numbers there. You know, the roadmap line kind of hanging right here. As we pull down, it'll kind of ease up. So right around that 37,000 area is where I would expect it to come down. Could find support as low as 35, but that's right where the consolidation was, right here. Imagine that. Now, the other point of support is this high from right back here. So I do think we could possibly go as low. I did delete like everything off this chart, so to clean it up, make it cleaner. Right there, we very easily could come down and retest that. If we get below that, watch out below, but right there. So if we drop below that, highly likely we're coming on down here. Highly likely. That looks like a wave 3. I don't expect it to overlap this down here. If we get below that, things aren't looking too bueno for, no bueno for the halving rally. So, as I usually show on the futures, I expected a large size pullback off of the spot ETF approval into the halving, potentially lasting through the halving. So this could last, this consolidation could last up to 6 months past the halving. So RL's 80 to 100 days. Well, the big thing is Bitcoin halving. This is the big event right here. 91 days. Could potentially last, another 1, 2, 3 months, 4, 5, 6 months past this. Entirely possible. We've seen that in the past on Bitcoin halving. So why futures chart? Because it's a certified price by the CME, and none of the other exchanges are certified by anybody. They're all just their own reporting. They're islands, right? The volume on Bitstamp is different than Coinbase, is different than Binance, different than Crypto.com. They all run their own volume. They all run their own prices. There's nothing unifies those prices except arbitration between the exchanges. Now, you may be like, well, how many exchanges could there possibly be? Well, if you go over to CoinMarketCap and you look at this baby, there are 695 exchanges. Not all of them do Bitcoin, but almost all of them do. So there's a lot of freaking exchanges. They're all island. They're all separate. And there's no regulation of unifying price between them. And you can come click right on Bitcoin and come down, and it'll show you the list of markets. And there are a lot of markets for Bitcoin. Binance runs lots of markets because it's different pairs. It runs a lot like Forex. Each pair is kind of a different market, you would say. So there's a whole lot. And there's probably exchanges you never even recognize in here. I mean, maybe if you're crypto savvy, but so comparing Bitcoin prices among exchanges, you got to stay on the same exchange if you're going to do the same prices. You can't go use Binance data today, KuCoin tomorrow, Bitstamp tomorrow, Coinbase, then flip back and use all-time history and then Kraken. Like, you can't bounce around and use the prices, because as you roll down through here, while there is arbitration and somewhat of a balance, you'll see some crazy numbers in here, off $1,000, $2,000, $3,000 sometimes, because the liquidity is not equal among all of these exchanges. Now, these are the more liquid exchanges, and as we dive down into the less liquid, that's usually where you see some of the craziness. And yeah, there you go. That one's got a $20,000, a $51,000, $39,000. You can see some crazy numbers as we get down way in the bottom of the queue, and it's got lots of asterisks to significantly differs from cryptocurrency's price. Yeah, see, so they're not sure that those prices are valid. I wouldn't be either, but I guarantee you there's somebody trying to arbitrate those and bring them up to parity some way, somehow. So looks like if you had a ton of torn coin, swap it to Bitcoin, really get paid there on hit BTC. Anyway, moving on. So it's one key thing. Like, a lot of people think that Bitcoin's price is the same everywhere. In fact, we often talk about Bitcoin's at XYZ dollars, but it may not be, depending on the exchange you're on. So I often see Crypto.com vary by several $100 from Coinbase. So anyway, and Crypto.com is somewhat less liquid on Bitcoin than Coinbase. And I was demonstrating this yesterday. Like, if you go to Bitstamp right here, you look at the volume number. Got all this crap in the bottom. 1,000 Bitcoins so far today. And then if we go to, can't hit enter, BTC USD. Gotta wait. Click on Coinbase. Click on the volume for today. You're at 6,500. So they're running separate volume calculations on Bitcoin. So just be careful. All of crypto works that way. They're all separate. There's no universal accounting for volume or price across crypto. Every exchange runs their own volume and price, and arbitration between exchanges is the only way that they're kept in balance. That's bigger, more savvy traders buying on one exchange and selling on the other to bring those prices back into balance. So, any questions on that, you can let me know. But so I tend to hang out with the same chart all the time, but I do bounce around because the charts do look slightly different based on the prices. So I like to use the futures chart because it is certified by the CME, but it is a derivative, of Bitcoin. It does not actually reflect the actual spot prices. And this exchange is closed from Friday evening today. It'll close at 5 p.m. today. Won't reopen until 6 p.m. on Sunday. So it does stay closed for essentially 2 days. But it will be open on Sunday. It'll start going again. So we'll see what happens on Bitcoin. We may see this big retrace here. We're pushing down out of that channel. We were in the channel. Could see that, or we could see something more like this. So far, we've been dropping pretty fast. We may find some support, kind of bounce along here before we finish this correction. Could take a while. In fact, could take like that. Been a proponent of that for a good long while. Now, inverse dollar. Kind of skipped over the other indexes briefly here. I'll circle back in a second. Dollar rallying up strong, but finding resistance at the roadmap line. If this turns back down and the correlation holds on Bitcoin, we can see Bitcoin rally again while the dollar push down. So why do I watch the dollar? Well, it kind of ties into everything a little bit. We typically, when the dollar rallies strong, we see the stock market pull back. July through October. Look familiar? Now, while the stock market didn't actually bottom till late October, the dollar kind of stopped early October, and then dollar dropped as the market rallied relentlessly into December. Now we've been kind of doing this little choppy consolidation thing, and the stock market has been doing a sideways choppy consolidation thingy right here, potentially trying to bust out here. Market just opened. We're not making a higher high yet. We're pushing the top of the box though. Could we run right up to that 1618? Entirely possible. Right up there around 48.83. This is the simplified chart. Does not include all the price action, just the daily closes in a simplified way. Just so it just cuts out some of the extra noise in the chart right there. Makes it simple. That's why it's a simplified chart. All right. So don't get confused on my levels for S&P. This is just looking at it different ways. When the different ways to look at it start disagreeing, then something's up in the market. That's why I look at them different ways. So just so you were aware, S5FI rolled down below 80. We could see some chop in here. Highly likely that this thing drops back down all the way to the bottom before we see a bust back out above 80. But we've seen some dips and pops before, where we dipped down below, down in the 70s, and then popped back up, failed to make a higher high, and then crushed. So is this one of those cases where we may rally right back up, make that higher high in the market, and then I don't know. It might be. Might be. It's just something to keep an eye on. Keep aware. This is a giant market oscillator, So once we're out of the top, odds are we're going out at least down to the bottom. So we may see it push out of the bottom. Now, stocks above their 20-day almost made it down to 20, and this one is a lot more volatile than that stocks above the 50-day. So this was indicating to me when I found it kind of last week that we're probably going to get a push further down in the stocks above the 50-day. And yeah, why 20 and 50? That's what a lot of traders use. Doesn't tend to be what I use, but there's indexes for this stuff with 20 and 50-day. So 20-day is 4 trading weeks, basically 5 days a week, 4 weeks. 50-day is 10 weeks. So moving on. ES looks like we're potentially going to pop out today. Getting a little retrace as the market opens here. We're up 30. Now we're only up 15. See how that works. NQ pushing higher though. It's like probably heading on up to that 17.4 that I mentioned. And didn't do the head and shoulders at this point. We made a higher high. So that pullback resulted in breaking out higher. Going on up. So we may see that pull on up there, may see that push the S&P up to a higher high than we saw in 2022 early. And that was the highest high in S&P back in 2022, early, January 4th, 5th, whatever it was. And Russell still looking kind of weak. Could rally up to the 618 here, but may just drop on down to this area. This is one to keep an eye on. If it doesn't show strength at all, maybe the canary in the coal mine to show us that the market's going to get a bigger, deeper retrace. One thing that made big news yesterday was the oil broke above the 50-day moving average for the first time in a long time. Bitcoin broke below the 50-day moving average for the first time in a long time. I was seeing that all over the place posted. So, seeing oil showing a little strength, showing Bitcoin showing a little weakness. Does it hold? Are those breaks just breaks and they're fake outs, or are they going to be breakouts like Bitcoin going further down and oil going further up? I don't know. We do have this. We still are in this continuing consolidation for oil, holding that kind of wedge thingy there. Trend lines matter. I did explain that to the in-person people quite in depth. Why a lot of trend lines matter, why I draw them a lot. And if you missed that conversation, I'm sorry. You can join the Termite Trading Labs, and we'll talk about it. It's my VIP group. It is expensive for those that... Is that expensive? Yeah, it's probably what a lot of people would consider expensive. I think my VIP group calls it pretty darn affordable and informative. A lot of them have made a ton of money in the market. Very proud of them. So, anyway, enough about that. We're in this watermelon seed squeeze bull crap. Triangle, whatever you want to call it. Wedge, consolidation. If we can break out, got resistance right up here. If we get above that, probably heading up into the 100 area, way up here. So definitely keeping an eye on oil. I have a position in UCO. It's a starter position. I kind of expect it to rally up into this 80 zone, do some sort of retrace, hold support, and then get up out of here. This was a potential measured bounce. We haven't really gotten the continuation yet. If it does, we could see it pop up into this 80 area. That would be the continuation of this measured bounce, which is right up in there. If we're bullish, we're going to get up to about 83, possibly the 618 area of this whole big pullback, 83, 84, right in here. Probably turn down, do a little retrace, maybe back into the roadmap line, maybe a little lower, retest the top of this consolidation. Don't really want to overlap this high right here at all. If we're going to break out, we don't want to come back below that for continued price action higher into the 100 area. I'm kind of focused on oil because I feel like it's a giant opportunity this year. Now, can it let me down epically? Sure. I mean, seen it happen before. And, this was chart of the week a few weeks back, and it just has never triggered. So, been keeping an eye on it, but it's just not been moving. Gold looks like a consolidation and needs to reach right back down into this zone to wrap this baby up. That's the first move down, retrace, second move down to a lower low, any lower low, lower than what we had in mid-December there. The retrace off the high. We just need one more tap right below that, clean it up, and we can go higher. Now it could go higher from here. That could have been all the consolidation there is, but right now it's messy. I would feel a lot better if we just tapped that roadmap line and then took off on gold. And Ethereum, just hanging around. A little more volatility. We've kind of started out pretty benign with volatility. Now we've gotten these bigger swings in price action. And if we break down below that, the trend line of those lows, with any kind of solid daily close, You know, we kind of rejected it. If we get down below there with any kind of solid daily close, kind of like we have with Bitcoin, we can expect a further decline in Ethereum, probably coming back into this zone around 2000. And there's the bigger potential that that move is done. That was a very, very, very balanced three-wave up to 100% extension of the first move, and this, second move up. That could lead to a lower low down around 600 on Ethereum. Very, very concerning to me right now that we could see this break down. So we get below 2000. Last line of support is probably somewhere around that 1600 area right here. And we could, right there around 1400, 1600, we get below that low, odds are we're going down here. Not good for Ethereum long term if we can't hold some bullish support. Actually, what's moving today in the regular stock market? Let's go ahead and talk about that, shall we? Enough of the depressing stuff. Looks like SMCI, despite doing this overlappy crap, gonna push on up 390, possibly 434. Ridiculous, and it's mostly on the back of Nvidia, just climbing like crazy. And KMNN, I'm not even sure what these guys do at all. Aerospace and defense. It's one of those quiet aerospace companies. Now look at this. We've kind of been on this downtrend here. Lower highs, try to break out, rejected. Watch out. We get below that roadmap line, we're probably going down instead of going up, even though it looks like we're trying to break out. That's been a long-term, not awesome chart. And have no reason to think that this is the bottom. At this point, price action not showing it's bullish. So that's not like a bullish reversal at this point yet. Could be, but we're going to have to get out of this downtrend. AVGO just keeps pushing. As I said yesterday, 1180, possibly 1200. You see on the upside there, LRCX. That's probably going higher also. Not sure where the fib lines went from yesterday, but the retrace pushes up. We got above the 618 yesterday pretty solidly. So 820, possibly 840 on the upside. Travelers, ridiculous pop. So I guess while a lot of other companies are having problems with their insurance and stuff, where do those alerts come from? I guess while a lot of other companies having problems doing car insurance and losing money insurance-wise, Travelers not having as much problem here. Looks like 217 is the next upside. That is a wicked pop. It's going exponential. It's going to come back down. So where's the last time this went exponential like that? And it did it right there. Consolidated for months. When this thing runs out of juice, it's probably going to consolidate for a while. If you have some exposure to Travelers, I'd definitely be careful. Whenever this thing gets done, probably going to consolidate for a while. Ooh. Forgot to pull the mic over. Hopefully wasn't too crazy quiet on everybody. I had stood up right before I went live and pushed the mic over. Nvidia pushing on up. Potentially going to run to 644. BA wasn't on the list this morning, I don't believe. SOXX is Better Well Health. Good to see you. Don't recognize your name, but welcome to the stream. I typically don't do requests in the morning show. That's the Tuesday show. Looks like we have a planned split right there, 3 for 1 on SOXX. Going to take the prices back down from about 600 back down to, what, 200? Divide by 3. So if you're in SOXX, be careful. That is a planned split event on March 7th. W Wayfair never has what I need. Is still in this consolidation wedge bullcrap thing. Probably hanging out right here. Just in the zone. Probably going to hang out around 70 until we either break out or break down. MSTR was popping pre-market. Now she's dropping. Probably going to touch the roadmap line, as I've said. If we can find support there again, like we have in the past. Found support, ran, found support, ran, found support, ran. That was a big run. Find support, run again. Let's see what we can do. It may consolidate for a couple months before we can run again. Don't get too excited if we just hit the roadmap line. Cold, natural gas, continuing to decline. And G1 exclamation point. Go look at the futures. Remember, derivatives, go look at the source. Cold trades, natural gas futures. If you don't know how to figure that out, type cold, ETF, prospectus, and go look at what they hold, what they trade. Read the prospectus, look at their holdings page. All ETFs have a holdings page, or they got to publish it somewhere. So if you're unsure on an ETF, go look at, go Google it, go look it up. All right, don't ask people. Go do the work. Nobody's going to watch out for you better than you. All right, it's your responsibility to know what the fudge you're trading. If you're doing some kind of derivative thing, you're like, oh, this thing is the greatest derivative ever. And all of a sudden you get blown out because you didn't understand what they were doing. That's on you. All right, you got to understand how their management works. Some of them have a maximum assets under management they want to keep, and then they'll, not really assets under management. It's a maximum value that they want to keep, and they'll actually return money to shareholders to keep that value, book value and asset value in the range that they want to keep it in. Prime example of that, NVDL. Look at this right here. This was a $10 special dividend that they returned because they needed to. All right, their money in their fund got out of whack, so they issued a special $10 dividend. And if you were in options, you got whacked on that one. You didn't get that dividend. That's why trading options on leverage is highly dangerous. But, in hindsight, it came back now after that giant dividend pay. So they rebalanced their cash books, paid out a special $10 dividend before the end of the year, and now we're back at it. So you got to understand what you're trading. So cold trades natural gas futures, and it's ultra short. So it's a leverage short, and if you're trading options on it, good on you. I mean, we may be on the way up to 133, 149, especially if NG1 goes back to $2 like I've been talking about. That we're probably heading down here. We keep failing to break out, and looks highly likely. We set this range back here in a matter of 2 weeks. Early in 2023, almost a year ago. We bottomed out in February. You don't think we're going to bottom out again? Bottom out February, bottom out in April. And watch out. This time of year actually tends to be pretty bearish for natural gas. Fur. I like that fur. Kimberly will probably make fun of me later. All the furs. This time of the year tends to be somewhat bearish for natural gas. FNGU, there's a leveraged ETN, probably going to pop that 255 level that we've been hunting for, since back in the summer. TXN, I will not. Yeah, you just like it when I say crown. Anyway, TXN, still chopping. That could be a roadmap line bounce, 175, 179. But bigger picture, it's just sideways choppy garbage. I wouldn't get involved. I mean, look at that. Look at that. CRWD, if I say anything that's helpful, any chart that you like, any information that's beneficial, please give me a like. give me a thumbs up. Give me a, if you're new here, give me a subscribe. Chat on the stream. Leave me a comment if you're watching later that anything I said was helpful. I do appreciate it. And the more you interact with video, the more YouTube knows that people actually like this content and will share it out to other people, or try to. So we have this exponentially move up with a potential to retrace, but this thing may just keep chooching higher right up here to this 350 area. Could take a while too. That's going a little exponential. We may see a retrace and sideways consolidation before we get on up there. 420 even higher than that. ANET. I keep leaning further forward, getting excited on these charts. I don't have my normal desktop that keeps me back from the camera. ANET just going nuts. That's getting exponential. Next level up, 277. At some point in time, it's going to run out of steam. It just, that's the way this stuff works. So be careful on the upside here. That's getting dangerous. Danger levels for me. STT. State Street. What is it? State Street Corporation. Banking. They report earnings today, probably. Yep. Surprise, beating on the top, beating on the bottom. Get a pop, but surprise, banking is a little bit weak, and we're seeing that retrace. FAS getting the retrace as money flows out of financials into big tech, probably. Well, that's exactly what we're seeing. We're seeing big tech rally. Financials are wrapping up this week on their earnings, and we're seeing big tech run. That's the pattern. That's the quarterly pattern. We're seeing tech, money loading into tech. I mean, it takes me saying it for a second before I even realize what I'm saying. We're seeing money rotate out of financials and into big tech. That's exactly what's happening right here. Now, be careful, because next week kicks off a big week of tech reporting earnings. We'll see money start flowing out of tech and into other things. So right now we're getting a little crazy on, I mean, IBM's getting a little crazy. Can't flip back to it. Go. There we go. So IBM popping up, hitting those levels, 171. AMD getting a little extra crazy itself. Next level up, 172. Oh, nice. I picked up a fib line somewhere. Extra clicking. We could keep rallying higher, but this thing's going to... Look at that move. Cheese and crackers, Batman. That's probably going to run out of steam and retrace. I mean, last time we went even kind of like that. We consolidated for months. That could consolidate for a long time after that runs out of juice. SMH. Now, also an interesting thing about, I was reading about AI. We're creating an organism that uses a ton of power. Now, you may not think of AI as an organism, but it kind of is if it thinks for itself. You know, we haven't gotten it to the point of general intelligence or super intelligence. You know, AGI. These are common terms in AI. I took some graduate classes, so bear with me. AGI, AGI, artificial general intelligence, means it's generally as smart as we are. We haven't created that yet, but we're working on it. There's a lot of people working on it, and it's speculated that to run one of these, or to run multiples of these from Google and Meta and all the players, OpenAI, Microsoft, all the people running these things, it's speculated that it's going to use 35 to 45 gigawatts of power. Now, a standard coal power plant produces about a gigawatt. One whole coal plant, about a gigawatt of power. One whole nuclear plant, about 2 gigawatts of power. So think about how much power that is when you think about running this organism, these AIs, maybe organisms as a whole. So 35 to 45 gigawatts, and every hour is a gigawatt hour of power. And you start doing the math, you're like, oh, wait, my bill's in kilowatt hours. So yeah, that's 1 megawatt is 1,000 kilowatts, and 1,000 megawatts is a gigawatt. So you're talking about 1 million kilowatt hours. So take your bill for every gigawatt. You can think about that in terms of how much power Bitcoin miners use too. But 1 million kilowatt hours for every gigawatt hour. sit there and you go, whoa, take my bill and multiply by 1,000,000. Yeah. And, you're paying 5 cents, 10 cents, 13 cents, 15 cents, 20 cents a kilowatt hour. And so it's fascinating to me. That's driving a lot of this. And it's a power hungry beast that we're creating. So we may all just be Duracells, as Mark referencing there on the Matrix. So SMH topping out maybe 192, 201. We could, this thing when it goes exponential tends to correct for several months. So watch out for the end of this baby. And QCOM right here looks like we're set on the, it set this range back here in 2022 and consolidated into this wedgie thing. It's not very perfect, but it did. Now we're breaking out, potentially going to run right up to the, we typically, when we break out on one of these, not every time, but typically, it's a typicality thing, and more than 50% of the time, when we break out, we'll run the distance of the start of the wedge. Now, did the start of the wedge happen here, or did it happen here? And was this the start of the wedge, right there? I don't know. Or was this move the start of the wedge? That's what makes this incredibly difficult. And the range would have been like this. So breaking out, we could top here. See the arrow there? Or top up there. So this is kind of like the danger zone for topping out. Right up in this zone. Right there. Now, does it have to go there? Absolutely not. Absolutely not. So, but that's just a target area you might want to consider booking. Now, something we saw recently do this, not really with the wedge, but with a pattern similar to the wedge. We saw Mara hit that high, hit that zone right up in there, and then plummet right back down. So you don't think these patterns work out. Occasionally I get lucky and find them, and they work. And so be careful out there. Just saying. EWTX looks like we could be popping back up to retest. Look at that rejection right there. That rejected hard. That rejected hard here. What are we doing now? I don't know. That's a biotech. I don't trade biotechs. Sideways chubby, nasty with a downtrend bias. Danger. My danger indicator keeps going off. This is a dangerous thing to play with. AMAT. That's a nice move. Looks like maybe headed up to 170, but probably should use the current consolidation. 169 would be my expectation before we retrace, and then pop 175 potentially, and then go for the bigger targets on bigger consolidations. And this one has one of those, has a head and shoulders thing back here that would take that up to 190 potentially. So if that continues to play out, probably see it rally right up there. And then that's a major resistance if we play that out. So I would definitely be careful there. Could we keep going? Sure. Duolingo got smacked down. I mean, look at that. Went crazy exponential. This is what I'm talking about. Like, once it runs out of juice, they come back hard. They come back fast. And relentless. Where's that one going to find support? Maybe here at the roadmap line. Maybe not. That could, if it breaks down below. I mean, we've held the roadmap once, twice, three. Do we hold it a fourth time? Or was that it? And we go for the bigger retrace. So the bigger retrace, this is going to be scary. Could be all the way down here at 130. Bottom of that consolidation. iRobots. Well, guess nobody's buying Roombas. This is why I say be careful on these downtrending things. Look at that. They're going out of business. based on this chart. Oh my gosh, look how much money they're losing. They're freaking hemorrhaging money. Have they never made money on Roombas? Back here. Haven't made money since 21. That's pretty horrible. Expected to lose more money. And this company may not make it. And that chart's been pretty wicked. I mean, wow. What an epic decline. 200. Down to 16. Wow. Don't chase garbage. Look at that. 91% of the value. Golly, man. I don't care what the news is. The news is, you know, whatever. Amazon wanted to buy it. Yeah. I don't want. Like, pick up the pieces when it goes bankrupt, I guess. God. Yeah, something stuck to the screen right there. Right. It was right where my crosshair was. A little black thing. Anyway. Baidu. That one. Sucking it up too right there. Probably going to come down to this 93 area. Rainier, however you say that. I think of the mountain, Rainier. Probably going to come back to the roadmap line. Would be my guess. Stalled out just past the 1618. Retrace would be in order. Simple as that. Celsius, still on consolidation. Has not been able to break a higher high. That may be headed to this 43 level. You may be like, wait. Celsius used to be a lot higher price. Yeah, they had a split right here, 3 for 1. So instead of being 170, it's now 150. I mean, it's now 55. And you may see that retrace back down to the 40 area. That's first move down, retrace, hold that 618. Watch out for support here. If we don't hold this, coming on down to this zone. And it's been on a monster run, so Monster, get it? They compete with Monster. Anyway, morning Monster, baby. I don't drink Celsius all that often, so they try to give it away at the gas station I go to all the time, or at the convenience store where I buy my milk. They gave away Celsius this week. So anyway, one member sent me a case of Celsius, lemon lime. So I do drink them. Anyway, Celsius potentially going down to 40. Be careful. It's in a correction. Once we get there, maybe we can resume the upside. We'll see. Nothing telling. Nothing high probability at this point. Would I trade for that? Nope. Sure wouldn't. All right. Bias for the day. Gosh, if it doesn't take the opportunity to make a higher high right now, I don't know. This seems like a perfect opportunity to pop that higher high, clean up the fat, just remove the potentially giant negative potential we have on the S&P right now. You know, Nasdaq's already removed it. Probably likely to go on up to that 17.4 price there on Nasdaq. So, just you know, jumping back to the simple chart, the simplest thing is just more sideways choppy garbage. I mentioned a few people back in December that maybe we just chop sideways for 2 or 3 months, and they're like, oh my gosh, that would be painful. And guess what? The market tends to do the most painful thing and take the most amount of money from the most number of traders. So we may just go freaking sideways. I hate to say it. We may just keep chopping, like make a little higher high, make a little lower low, and just keep chopping and just chop everybody up. So be careful out there. Be careful, be careful. They've sucked all the IV out of the market. There's no premium to sell. It makes it incredibly difficult, like incredibly difficult. So thanks for watching. I'll be in Discord the rest of the day. If you want to come join me, links in the description down below. If I said anything that was helpful, make sure you give me a thumbs up. Make sure you give me a like. Make sure you subscribe so you can see me when I come back on Monday. Hopefully, I'll be back in the office. We'll see. Still nasty outside. We're just below freezing, so this crap isn't going away so far. And hope to see everybody on Monday. Bye for now. Have a great day, everybody.